Hey there, E-mini Minders. This is Trader Tim from eminimind.com doing a Monday market analysis video. A little bit more of a trade recap though. For today, it's the September 23rd, 2019. And I appreciate those who left some feedback. If you have suggestions or things you'd like to see in the videos, please let me know in the comments below. It sounds like the trade recaps are a little bit more valuable than some of the macro and bigger picture stuff, which I'm totally fine with. It makes a lot of sense. So I can keep trying to do more of those. So feel free to leave your comments in the comment box. I appreciate that. Today is Monday, and we're kind of up at this kind of a double top. We haven't really broke the swing low down here at 29.80.75. So as I look at the daily chart, even though we're day trading and executing on the smaller time frames, this is one way that you know I take the larger, the bigger picture information and actually apply it to how I'm going to trade. If I see that we break this swing low below this hammer here, maybe tomorrow, Tuesday, or later in the week, now all of a sudden, there's some potential for some serious downside, or at least breaking the swing low is the first step towards that. So then if I come intraday, I can see, looking for shorts in that situation, or I can draw a retracement on the daily chart, like in this case, if I draw a low to high, we're right at the 50% on the daily chart. So intraday, if I do this analysis on Sunday or in the morning pre-market, then intraday, I can just keep in the back of my mind, okay, longs might be getting some momentum here because we have some support on the daily chart. So that's all we'll really go into on the bigger picture for today. But when it comes to then applying that intraday, we started with a decent uptrend in the first 20 minutes or so, and that established our high and low for the morning. And then from there, we looked a lot like, was it last Monday, where we went into this triangle pattern, and you can see, a series of lower highs being put in, at the same time higher lows. And what you want to do when you're in this sort of triangle or consolidation within a range is look at or look for breaks of either one of the swing highs, one of the more major swing highs, like this guy here or this guy up here, or even a swing low break of this guy down here or this one over here. If I zoom in a little bit, these little tinier, smaller swing highs are not as actionable. But when we look at the bigger turns, those ones I'm looking for us to break, as we did here. It was kind of later in the morning. Earlier, we just, we remember we want to stay out of the middle of a range, because if we drop the 50%, you have a break of the long, break of the short, break of the long, just constantly over and over again. But then we had a break of this swing high right here at this point. We moved above this swing high. And so I thought, okay, that's interesting. And remembering that the daily chart, we were sitting at a daily 50% long. If I draw from low to high, I can see, okay, well, we stopped at the 50 and we ran up and made a new high. So this high right here, where I've got this second retracement drawn to, broke this swing high, this little double top. And so that gave me the confidence to take a long setup, because we're starting to break swing highs. Even though we're within the range, the high and low for the day, the fact that I'm starting to see, okay, we've got these higher lows here, we're breaking swing highs, and we have this, daily long that's below us. Really right around that apex was the actual 50. We traded a little bit lower, but we've got momentum and support below us. So taking a long a little bit, I wouldn't say prematurely, but just a little bit early before the breakout is a really good play. And then you can see it kind of got messy up in here. I was able to just trail my stop below this swing low, and I just kind of left it alone because it was just underneath the top of the first 30-minute range. We chopped around for it seemed like forever. It was like 20 minutes only, and then we got another push higher. Was able to put my stop underneath that swing low. Another push higher, pull back. Had this little double top, and then I got taken out up here around 96. I think it was a 95. Yeah, right at 96. Um, just one tick below lows. And so a 91.50 up to a 96. Pretty good trade, but you had to wait for it. You know, getting to that point of catching that winner, if you took, you know, a half dozen losing trades in here is just not a good matchup. So these retracement longs would have been nice, except it was a little bit early. It was before that first 15-minute mark, and so by the time we got beyond the first 15 minutes, um, we were kind of already a little bit, not a little bit too far gone, but you know the trend we'd been down here at 83, and now we're trading up at 93, all in 15 minutes, and we were inside of yesterday's or Friday's range, Friday's high and low. So if we were in new high territory, I would have been okay going for this long here, but because we were just basically coming back into yesterday's range, it didn't really give me a lot of confidence to take this long. It did get a little reaction, which was nice, but then we had the sell-off. Then the other thing I want to talk about is Friday's trade. There was a really nice short here that sold off, and the way to get in was first identify the full halfway back for the day. And the morning again was there was some good movement, but it it, it could have shaken some people up and kind of chopped you up if you weren't careful. But waiting for the little bit bigger time frame setup, this larger halfway back, 50%, then drawing up the opposing long, letting that 61.8 fail. Once it breaks at 61.8, then drawing up the very next setup. So from the high down to the low after the 61.8 breaks. And then that one set up very nicely right at the underside of the first 30-minute low, and then just drop like a rock, which was great. And you can either trail, you know, when it drops fast like this, trail each candle's high, and it's happening super quick. And then if you've still got a contract left or two, you can trail swing highs when we start to kind of pull back, sell off, and get another, sometimes a big chunk, being a little conservative with your trail stop. But you can't really let a move like this go, like a sell-off like this, with your stop sitting up here at 30.12s when the market's trading at 30.02s. So being aggressive when the market moves quickly is totally fine. So that's how you can use the 30-minute range, that the larger halfway back for the day, the full halfway back, to get some perspective on the day. And same thing with today. If you drew the full halfway back, you say, oh, well, we failed it. Okay, let me draw the other direction. Oh, we failed it too. As opposed to taking it blind, like just putting a limit order there, you'd be stopped out and then stopped out, as opposed to let me see if it trades, let me see if there's a bounce, and then take a setup off of that level. So I hope you found that helpful. Leave your comments below, and then tomorrow morning we'll be doing a trading session as well as a webinar in the afternoon. You can find all that info over at eminimind.com. Thanks and have a great week.